Welcome to KOT Aero, knowledge on tap for the aerospace industry. Subscribe for free at kotaero.com. All right, let's dive into it.
Welcome in. Today we're doing a deep dive into RTX Corporation's Q3 2024 financials. And let me tell you, their latest SEC filing. It's a goldmine of insights.
Yeah, it really is. Makes for some interesting reading, especially compared to what we saw last year.
Yeah, their Q3 2023 loss, that was definitely a moment.
Oh, yeah.
This year's report, though, paints a very different picture, wouldn't you say?
For sure, absolutely.
Yeah.
I mean, that $984 million loss,
Mhm.
it's transformed into a net income of $1.472 billion. Quite a turnaround.
Yeah, no kidding.
But the question is, how much of this is a real comeback versus just, last year's powder metal matter charges? Those are finally off the books, right?
Okay, so let's break this down. They're in a much stronger position now, clearly. But are we looking at sustainable growth here or just a temporary blip?
Well, their net income for the first 9 months of 2024, that hit $3.292 billion, compared to $1.769 billion for the same period in 2023. That tells me this isn't just a fluke. Something interesting is definitely happening beneath the surface.
Okay, you've got my attention. But RTX isn't just one big company, right? They've got Collins Aerospace, Pratt and Whitney, and Raytheon. Each one's playing in different parts of the market.
That's right.
So what can you tell us about how those individual segments are doing?
Well, Collins Aerospace, they're showing some impressive stability. They've seen growth in both sales and operating profit for Q3. That's likely driven by their strong presence in defense and commercial aerospace.
Makes sense. With everything happening globally, the defense contracts are probably keeping them busy, and people are flying again, so that always helps the commercial side. What about Pratt and Whitney? Last year, they were right in the middle of that powder metal matter issue, weren't they?
They were. And unsurprisingly, their Q3 2024 results tell a very different story. Now, while the absence of those prior year charges is definitely a factor, their performance in military engine programs, that's driving some significant improvement.
So they're not just recovering, they're hitting their stride. Okay, what about their more consistent performer, Raytheon? What's their story in this quarter's report?
Well, Raytheon, as usual, they're demonstrating a certain level of stability. Their involvement in those big defense projects is definitely a positive. But they've also had to contend with some contract terminations, and that's impacting their bottom line.
Ah, yes, the good old ebb and flow of government contracts. It's never a dull moment in that world. Now, I know for our listeners who love to really get into it, the real excitement is in the details, and boy, does this 10Q have some juicy ones.
Oh, it does.
Ready to put on our detective hats and dig in.
Always up for a bit of financial forensics. Where should we begin our investigation?
Let's start with those Middle East contracts that RTX has been navigating this year. It looks like they've finally received that critical license to restart work. That's a big win, right?
It is, yes.
Right.
But the situation, it's far from simple. The filing mentions $430 million in contract liabilities, essentially money they might have to refund if these contracts fall through. It just goes to show how precarious things are, operating in such a volatile region.
Yeah. High risk, high reward, as they say.
Yeah.
Speaking of strategic moves, let's talk about that massive share buyback program. RTX implemented that last October. They committed a cool $10 billion to buying back their own stock. What's the strategy there?
Well, it's a classic move. It signals confidence to investors. By buying back shares, RTX is essentially saying they believe their stock is undervalued, and that can potentially boost its value.
It's a bold statement, that's for sure. On another note, I noticed the 10Q briefly mentioned RTX's ESG initiatives, specifically a substantial reserve for environmental remediation. That caught my eye.
Yeah, it's not an insignificant sum,
Well,
especially for an industry that's grappling with its environmental impact. This suggests they're going beyond just meeting those regulatory requirements. They're actively trying to reduce their footprint.
it seems like everyone's starting to realize that environmental responsibility, it's not just good PR, it's good business.
It really is.
But even with all the positive momentum this quarter, I'm seeing some potential storm clouds gathering on the horizon for RTX. What do you think?
Well, those ongoing global supply chain disruptions are still creating headaches, particularly when it comes to rising costs. Material costs, labor. Even giants like RTX are feeling the squeeze.
Yeah, it's like trying to build a house on shifting sand.
Speaking of shaky ground, what about the geopolitical uncertainties we're seeing play out globally? How are those impacting RTX's operations?
Yeah, the impact is undeniable. The war in Ukraine, the tensions with China, that uncertainty in the Middle East, these all factor into RTX's risk assessment. We're talking about potential sanctions, trade disruptions, general instability in key markets. And then there's the ever-present question mark hanging over U.S. government funding. With the current continuing resolution extending into December 2024, that's got to be a concern for a company so reliant on government contracts.
Oh, absolutely. That uncertainty around future defense spending just adds another layer of complexity to their forecasting. It's a delicate balancing act, for sure.
We've certainly uncovered a lot in this first part of our deep dive. What stands out to you so far?
You know what fascinates me? It's the delicate tightrope walk that RTX is performing, balancing this impressive financial recovery. But against this backdrop of geopolitical uncertainty and economic volatility, it makes you wonder how they'll maintain this momentum.
That's the million-dollar question, and one we'll be exploring further when we return. Stay tuned as we unpack more intriguing details from RTX's financials and analyze what they could mean for the company's future. Welcome back. We're digging deeper into RTX's Q3 2024 financials. And after that first look, I'm even more curious. How is this complex web of factors going to impact their future?
Yeah, it's like we're piecing together a puzzle. But some of the pieces keep changing shape. On the one hand, you've got this impressive comeback story, but on the other, you've got these looming challenges. They could easily throw them off course.
Exactly. So let's talk strategy. RTX made some big moves this past year. I'm really interested in unpacking that massive $10 billion share buyback program. What's your take on that decision, especially given all the uncertainties they're facing?
Well, it's a fascinating play. On the surface, it signals extreme confidence in their future. I mean, by scooping up their own shares, they're essentially betting on themselves.
Right.
They're aiming to boost earnings per share.
Yeah.
And hopefully make that stock more enticing to investors.
But couldn't it also be a way to kind of appease investors who might be worried about those very uncertainties we just talked about? Almost like a, look, we're doing great, trust us kind of move.
Yeah, it's definitely possible. Share buybacks can be a way to boost short-term stock performance and maybe distract from some of those underlying concerns. The question is, does it come at the expense of investing in long-term growth opportunities?
Right, like allocating those funds towards research and development or new acquisitions or even like bolstering their workforce.
Exactly.
It's a gamble, that's for sure.
A calculated one, hopefully. Only time will tell if this buyback strategy delivers, or if those funds could have been put to better use elsewhere.
Right. Speaking of strategic allocations, let's get back to RTX's commitment to those ESG initiatives. That $800 million environmental reserve we talked about before, that really got my attention.
Yeah, it's not an insignificant sum.
Yeah.
Especially in an industry that's really grappling with its environmental impact. This suggests a real shift. We're going beyond just meeting those regulatory requirements. This is about actively allocating resources to mitigating their footprint.
Do you think it's driven by a genuine commitment? Or is it more of a response to investor pressure? Like, that growing demand for sustainable practices from investors?
It's probably a combination of things. I mean, investors are definitely factoring ESG performance into their decisions more and more these days. And there's just this growing awareness that environmental responsibility, it's not just ethical, it's also financially sound in the long run.
So it's not just about doing good. It's about doing well by doing good. Okay, let's shift gears a bit. Let's talk about those storm clouds we mentioned earlier, specifically those global supply chain disruptions that are impacting just about every industry right now. How is RTX handling those pressures?
Well, they're not immune, that's for sure. Rising material costs, labor shortages, shipping delays. It affects everyone. RTX is no exception. But I think what's really interesting here is their approach to mitigating these risks.
Okay, tell me more. What are they doing to navigate this really turbulent landscape?
Well, they're clearly not putting all their eggs in one basket. They're diversifying their supply chain, looking for alternative suppliers, exploring new sourcing options. It's about reducing their reliance on single sources and building greater flexibility into their operations.
That makes sense. What about investing in their own internal capabilities? Are they making any moves to become more self-sufficient?
Absolutely. The 10Q hints at this increased investment in manufacturing capacity and technologies that'll improve their efficiency and reduce their reliance on external factors. It's about controlling what they can in a very unpredictable world.
So a proactive rather than a reactive approach. Okay, let's talk about another layer of complexity here, those geopolitical uncertainties. How is RTX navigating the minefield of international relations, especially given their reliance on all those defense contracts?
It's a delicate balancing act, for sure. I mean, the war in Ukraine, tensions with China, the volatile situation in the Middle East, these all have the potential to really impact RTX's operations. We could see sanctions, trade disruptions, even shifts in those defense spending priorities.
So it seems like they're walking a tightrope. On the one hand, they want to capitalize on opportunities in these volatile regions. But on the other hand, they have to manage the inherent risks. What does that look like in practice?
It's about being strategic, carefully assessing that risk-reward balance in each region, fostering strong relationships with key partners, and diversifying their customer base so they're not reliant on any single market. It's a high-stakes game of chess, essentially.
And one that requires constant adaptation. And reevaluation. It's not just about securing contracts anymore. It's about understanding that geopolitical landscape and making smart decisions based on circumstances that are constantly evolving.
Precisely. It's about anticipating those potential disruptions and having some contingency plans in place. And of course, we can't forget about the elephant in the room, that uncertainty around U.S. government funding, especially with that continuing resolution extending into December 2024.
Right, with so much of their revenue tied to government contracts. That's a major factor influencing their future. How are they approaching this particular challenge?
Well, they're not just sitting idly by. They're actively engaging with government officials, advocating for their interests, and just staying informed about all the budget discussions.
So a combination of diplomacy and keeping their ear to the ground. But are they putting all their eggs in the U.S. government basket, so to speak?
Not at all. The 10Q also highlights their efforts to expand their customer base internationally. It's all about reducing their reliance on any single market.
It's a smart diversification strategy, especially given the uncertainties around U.S. defense spending in the coming years. It seems like RTX is taking a multi-pronged approach to mitigating all these challenges.
Absolutely. They're building resilience into their operations, they're diversifying their customer base, and they're strategically navigating those geopolitical complexities. It's a very dynamic situation that requires constant adaptation and a long-term perspective.
We've covered a lot of ground in this episode. We've dissected RTX's financials, we've analyzed their strategic moves, but we're not done yet. When we return, we'll bring it all together. We'll extract some key takeaways and leave you with some final thoughts to ponder. And we're back. We've spent this whole episode really digging into RTX's Q3 2024 financials. We've uncovered some promising trends, but also some looming challenges.
It has been quite the journey, analyzing that impressive profit turnaround and all their strategic moves, trying to figure out how they're going to handle all those uncertainties in the global landscape.
Exactly. But it's time to step back. Look at the bigger picture. If you had to sum up this quarter's report, like the whole narrative, in one sentence, what would it be?
That's a tough one. I think it would be. RTX is showing resilience in the face of complexity. They're not just riding out the storm. They're adapting. They're evolving to try to thrive in this constantly changing environment.
And that adaptability is definitely going to be crucial, especially given all the headwinds they're facing. We've got supply chain disruptions, geopolitical instability, and all that uncertainty around U.S. government funding. Of all those challenges, which one do you think is the most significant for their future?
While all of those are definitely significant, I really think it's those geopolitical factors. They just introduce this level of unpredictability. That's really hard to overstate. I mean, the war in Ukraine, tensions with China, volatility in the Middle East, these are all constantly evolving situations, and they could have ripple effects across their entire business.
Especially since RTX relies so heavily on those defense contracts.
Exactly.
And those contracts can vanish just as quickly as they appear. It all depends on what's happening with international relations.
That's right. One little shift in a region's political landscape, things could escalate. There could be a change in U.S. foreign policy, and it could have a huge impact on RTX's bottom line. It's a high-stakes environment that's constantly changing.
So how do you reconcile that with that bold move to launch a $10 billion share buyback program? It seems like kind of a counterintuitive move, pouring all that capital into boosting their stock value when they're dealing with such huge external threats.
Yeah, it's a tough balance. On the one hand, it sends a message to investors that they're confident. It might boost their stock price during uncertain times. It shows that they have faith in their own future.
But on the other hand, like we said before, it limits their flexibility to capitalize on new opportunities.
Right.
Or even just weather any unexpected storms.
That's right. I mean, they could have directed those funds towards R&D acquisitions, or even just strengthening their supply chain, All of those are critical for dealing with the challenges we've been talking about.
It's that classic dilemma, short-term gain versus long-term investment. It'll be really interesting to see how this strategy plays out over the next few years.
Yeah, it will. And you know what else I'll be curious to see? How their commitment to those ESG initiatives evolves. That $800 million environmental reserve, that's a big deal. It tells me they're starting to think differently. But now they have to translate that into action.
Do you think this shift, is it driven by a sincere desire to be more sustainable? Or is it just a response to investor pressure and changing market expectations?
Honestly, it's probably a little bit of both. Investors are definitely prioritizing companies with strong ESG performance. And for good reason. Sustainability. It's not just some feel-good initiative anymore. It's becoming a core part of long-term value creation.
Absolutely. Companies that ignore environmental and social responsibility, they do so at their own peril.
I completely agree. And we're seeing that realization across all industries now.
Yeah, it's about recognizing that responsible business practices, they're not just good for the planet, they're good for business.
Exactly.
So as we wrap up our deep dive into RTX's Q3 2024 financials, what are the key takeaways? What do we want our listeners to remember?
I think the main takeaway is RTX is walking this really fascinating tightrope. They're showing resilience. They're adapting to some really complex geopolitical and economic challenges. But ultimately, their long-term success is going to depend on a few things: how well they leverage their strengths, how well they mitigate risks, and how well they can adapt to a rapidly changing world.
It's a dynamic situation. It requires constant vigilance, strategic foresight, and a willingness to make those tough decisions.
I couldn't agree more. And it highlights a really crucial lesson for investors. If you want to understand a company's financial performance, you have to look beyond the numbers. You have to understand the global forces that are shaping their future.
It's about understanding the story behind the numbers.
Exactly.
That's what makes these deep dives so interesting. Thanks for joining us on this journey into RTX's financial landscape. Until next time, keep asking those questions. Keep learning. And remember, the world of business is anything but boring.